Hello and welcome to the second in our Doing Business webinar series, which is a series of international roadshows where we travel around the world listening to and quizzing experts in different locations on how to do business in their country or their region, and hopefully help to provide UK companies with a gateway to new opportunities. My name is Tony Summers and I'm a partner here at Carpenter Box and I head up our international service team. I'm going to be your host today. Carpenter Box are proud members of Prime Global, which is, I believe, the current International Accountants Association of the Year. So we thought it'd be crazy not to tap into the talent and expertise found within Prime Global and bring that great insight to companies here in the UK. In September, we held a webinar event on how to do business in Hong Kong and it being a gateway into China. So if you missed that, well, shame on you. But if you can still see it on our events page on our website. Today, you will hear from our Dutch Prime Global colleagues, Mark and Peter, and I'll introduce those in a moment, on how to do business in the Netherlands and using the Netherlands to open up, or probably in some cases reopen, a gateway into Europe. Before I invite them to take the floor, a few admin points. There's an awful lot of us on the webinar, so everyone's going to be muted except the panelists. Mark and Peter will run through a presentation they've made specifically for this session, incorporating a number of real case studies to bring to life some of the points that they want to make. That will be followed by a Q&A session. So if you've got any questions you'd like me to ask our dynamic Dutch duo, that's not easy to say, please submit them through the chat or Q&A function. When registering, some of you take the opportunity to submit some questions in advance, so I'll try and incorporate those as we go. If time runs out and there are a lot of questions that we don't get to cover, we'll forward them on to Mark and Peter and look at a way of sharing their answers with you. May I suggest that if you've got a really niche question or a detailed question, please feel free to contact Mark or Peter directly. Their contact details will be on the slides, which will be circulated after the webinar to everyone that's registered. And we'll also put their email addresses into the chat function so that you can make a note of them if you want to. One final point, if there's a question that gets raised that needs some sort of UK related input, be that cross-border interaction or VAT and duties, then we also have on the webinar a couple of our own resident international tax and VAT specialists in Anthony Davies and Dan Hobbs. So we're well covered to be able to compare and contrast. At the end of the webinar, I'll signpost the host country for our next Doing Business webinar. So that'll be exciting and something to look forward to. But I think you'll agree that's enough from me. So on to the main event, and I'd like to welcome Mark and Peter at this point and pass on the baton to them. So gentlemen, over to you to introduce yourselves, your firm, and the issues that UK companies should be made aware of when doing business in the Netherlands. At that point,
all right. Good morning, everybody, and especially great thanks, Tony, to this beautiful introduction. Also, great welcome to Anthony and Dan, who will be in our London office supporting us mentally and maybe with some content also. But anyhow, we are happy that we are a guest and we can provide you with some information of doing business in the Netherlands. First of all, we want to shortly introduce ourselves. Peter, you might kick off to be...
Sure. My name is Peter, tax advisor. I have over 10 years of experience in international tax. The daily job is mainly two things. One is specialized tax advice on issues touching corporate income tax and withholding taxes. And the other one is more general support for our foreign clients coming from abroad to the Netherlands in assisting in the setting up of a BV and in all the coordination that we sometimes need to do with different stakeholders such as lawyers or notary publics.
Thank you very much. And for myself, my name is Mark Jan for Dutch people, but you all can call me Mark. And I've been in this business for over 25 years. Started off as a tax advisor with PwC, and I've always been busy in advisory of international family-owned business relations. I'm a father of two, son and a daughter, and I'm 51 years, so still going young and going strong. For today, we wanted to have, after a short introduction, we have chosen to give you more insight about doing business in the Netherlands by sharing 4 case studies. I hope time is enough to cover them all 4, but if not, we will skip one. But we'll do our utmost best to get there with you together. First of all, after a short introduction, we show the Netherlands as a gateway to the EU market. And then, as Tony just mentioned, afterwards, so you don't have to write everything down, we or Carpenter will provide you with the slides. So let's kick off with a short introduction. Thank you. First of all, we wanted to show you that, where we are located. It is in Eindhoven. And we like to mention that Eindhoven is in the center of the Netherlands and also in the center of Europe, exactly in the middle. And to give you some idea of distances in the Netherlands, we are 110 kilometers from Amsterdam, as well as from Rotterdam, and also 19 kilometers from Antwerp. The flight from London to Eindhoven is approximately 1 hour, and we are quite reachable in Eindhoven, as we have our own airport also. To show you a little bit about the region we are in, and a little bit about the Netherlands, we are going to try to show you a little movie. It's 1 minute 30. So now we'll try to go to this movie to give you some impression of the region.
Come here to learn, because that's the best thing you can do.
It's just the center where things happen.
The Silicon Valley for you, and human Silicon Valley. It was an eye-opening and really a mind-blowing experience.
Disney does not have what you have.
So this short movie shows that we are in a region with lots of high tech and all kinds of firms providing to the high tech firms that we have in the region. It's an innovative region, and our office, as you can see here, this is our office building. Also from the interior side, is located in the center of this region in Eindhoven. So you have some idea of how we are located and where we work and where we are broadcasting from today. A little bit of background of our firm. We are an advisory and accounting firm, and we are founded in 1984 in Eindhoven also. We are established, as I said, in Eindhoven, and we have one office building where we work with 140 professionals and provide services like accountancy, assurance, tax, corporate finance, forensics and recovery, payrolling, IT services, and also the integrated finance service. Just shortly, so you get to know a little bit about the region, our firm, and the Netherlands as a whole. Some information more about the Netherlands as a gateway to the EU market. We have a central location in the European market with, of course, approximately 44 million consumers. We think we have a first-class infrastructure in the Netherlands with a famous port of Rotterdam and Amsterdam, very close to the port of Antwerp also. And, the Schiphol airport might be known by all of you, but not all of you might know that Eindhoven has also an airport, and we have straight flights to London. So it's approximately 1 hour travel from Eindhoven to London. Other thing I wanted to mention is we have a history as a trading nation, and there was a survey that the Netherlands and people in the Netherlands have a high proficiency on speaking English. This survey ranked the Netherlands as the #1 with 72.2 score as a comparison to Germany, for instance. They scored rank 9 with 61.5 on this. So we might say we are a little bit proud that normally in education people are, well, quite good in speaking English. And as all of you know, we had a famous football player who proved that English is also near to Dutch, but we're not getting into that now. Special point of attention for UK companies after the Brexit. Well, import and distribution of goods into the EU market is lots of time done via the Netherlands. And in business case number 3, we'll get back to that because what we see right now is that lots of UK companies are setting up warehouses and starting business via the Netherlands to get on the mainland. So this is just like a general introduction, as we are here from the Netherlands, from Eindhoven, the Brainport region, as a gateway into the EU market.
Okay, well, right now I'm going to give you a couple of the main international trends in the regulatory environment that we see and how these translate to the Netherlands. And after that, we will discuss 4 business case studies to make it more visible and tangible what it means to set up certain activities in the Netherlands. So on the left side, you will see the international developments. Point 1 being the political debate about tax avoidance, tax evasion versus tax competition. And what we see in the Netherlands is that as a consequence of this, we get new tax rules inspired by the BEPS project of the OECD. These have regulations such as CFC rules and hybrid mismatch rules. And actually, if I'm correct, you have similar regulations in the UK. Just mentioning that as a general point. Second point is that recently, I think it was the beginning of this week, the G20 agreed in Rome to set corporate income taxes globally at a level of a minimum of 15%. In the Netherlands, it already is 15%. One of the participants asked how we compare to Germany. I looked it up briefly for you. What I could find is that Germany, it has both a corporate income tax and a trade tax, which you need to add up. And then you get a percentage of somewhere between 30 and 35%. And that also depends a bit on where you're located. So, for instance, the total tax rate in Munich might be different from the tax rate in Berlin, but it's somewhere between 30 and 35%. Point 3, more taxation rights for source jurisdictions. Basically, it means that, for instance, if you are a UK company and you're established in the UK, you, as a main rule, pay all your taxes there. But if you have activity abroad, and we call those countries source countries, you might also have to pay tax over there. Netherlands has had a long tradition of limiting source taxation. And we've only introduced an interest and royalty withholding tax at the beginning of this year. For our client base, it doesn't make that much of a difference because it mainly applies if you have interest and royalty payments to low tax jurisdictions that are on the EU blacklist. And to give you a couple of examples, those are jurisdictions like the Virgin Islands, Panama, Fiji. So in most cases, this does not apply. One thing that we do see happen in the Netherlands is that tax authorities focus more on the presence of permanent establishments here. And actually in the first 2 case studies, we will show you what that can mean. The fourth point, anti-money laundering measures. Well, in the Netherlands, this has led to a steady increase of KYC requirements for financial institutions. Basically, these rules mean that as a financial service provider, be it a bank, be it an accountant, you have to make sure that you know for who you are working, and that your work does not get you involved into money laundering or terrorism financing activities. One practical translation is that in the Netherlands, the requirements and the length of the procedure to get a bank account for your business, if you set up a Dutch BV, actually takes quite a while this time, but we hear from our clients that it basically is the same in, I think it was Italy, Germany, Spain. You can see that it can take up to 3 or 4 months to get the whole procedure finished. So these are just general points I would like to mention to you. And now we'll go to the first case study, which actually involves the hiring of R&D staff in the Netherlands. Well, in this example, we chose R&D staff because this case is based on an actual case that we did. But it could also be other staff. Note that there are special rules for sales staff, but those will be covered in the second business case. So what happened in this business case is that we have UK Limited. They've been hiring R&D staff, so you can think of programmers or engineers to work on the products from X Limited. The context is that they've not asked either us or the UK advisor for help on this, so they just start hiring these people. What we often see is that if a UK company is only hiring people, that they prefer not to set up a branch or a BV because, well, this triggers extra compliance costs and work that they're not really looking for. And in this case, they actually concluded so-called contractor agreements with the programmers and the engineers. And the contractors themselves, they rented the office space in which they worked for UK Limited, but the UK Limited directly paid the rent for the landlord. Now, at some point, the UK accountant became aware of the setup and asked us, well, I'm not quite sure if this setup triggers any problems in the Netherlands, but could you have a look with us? So then we were involved and we found two main points of attention. The first one is, does the UK Limited have a permanent establishment in the Netherlands? Practical implication would be that the UK Limited would also have to pay corporate income tax here. Second point, does the R&D staff actually qualify as employees, or are they contractors according to Dutch employment law? Well, to go to the main conclusions, when we looked at the contracts that the R&D staff concluded, those were formally contract agreements, but it turned out that they were only working for the UK Limited. Also, that one of the employees did actually have a bonus incentive plan with the UK Limited. So basically meaning if the UK Limited performed well and if she met certain standards, she would get shares in X Limited. And all of the facts combined actually showed that these people were actually more like employees than contractors. And in practical terms, that means that in the previous 3 years, the UK Limited would actually have had to withhold wage tax over the money that they pay to the contractors. And with respect to corporate income tax, we noted that even while formerly the UK Limited did not rent the office space, but they did directly pay the rent to the landlord, that this still led to the presence of a permanent establishment in the Netherlands. That meant that they would have had to pay 3 years of corporate income tax here. All this leads to repair work afterwards. So the main conclusion from us was it's better to pay attention to the nature of agreement with staff that you hire in the Netherlands beforehand and not afterwards. Second point, check APE risk when you start your activities and not years later. And also that if you evaluate these things in time, it's less costly to do it good upfront than to repair afterwards. Do you have anything to add to that?
No, I think that's a good conclusion because, for instance, payment to the staff will be considered a net payment from the Dutch tax authorities. So if you pay 100, Dutch tax authorities will consider this a net payment of 100, and your tax obligation will, well, approximately be also 100, next to interest that has to be paid because you are too late, and maybe a fine because you didn't have the right tax compliant, you weren't compliant with your tax obligation. So conclusion is think up front and then act, and do not act and think afterwards.
Okay. Next case is quite similar in setup, but actually concerns the hiring of sales staff, for which we have special regulations. We covered the main points in the previous business case, just giving you a general idea of the setup. We had a UK Limited who hired sales staff in the Netherlands. The sales staff go on the Dutch market, represent the company, and then contracts are formally negotiated with the staff that's based in the UK. In this case, there was no discussion about independent contractors or employees. These sales staff were hired and payrolled as employees from UK Limited. But the UK Limited did rent an office space, but it was a virtual office space. So what that means, they have a business address registered with the Dutch tax authorities. Also here, the main point of attention, does the Limited have a PE in the Netherlands? We asked the client upfront, what is your setup in the Netherlands, and is there a PE risk? They indicated to us that their UK advisor had already checked on this and told them there was not a PE, and that the people that they hired were working from home, were not working from an office space that they hired, and also that they were not allowed to legally bind the Limited when they were doing the sales representation. Okay, at a high level, that sounds reasonable, feasible, it's where you read. Now, what happens afterwards is that at some point, the tax authorities see that there is a payroll for employees in the Netherlands. They do see that there is a business address of the Limited in the Netherlands, and they send a questionnaire asking some questions about the setup. These questions are then answered in line with the answers that we previously got from the client. But then the tax authority starts asking, okay, so can you provide any documentation indicating what this sales staff is not allowed to do and what they are allowed to do? So do you have somewhere in writing that they do not negotiate contracts? And also, if they don't, what is their role in the whole sales process? So then they asked for a breakdown of the sales process in terms of, okay, you do the first call, you have a client meeting, you do a demonstration of your product, then the lead is forwarded to the UK, so a whole breakdown of the sales process and what is the sales staff actually doing here. And actually, following from that, it became apparent that the role of the sales staff was actually quite bigger than it was previously presented to us. Also in this case, the moral of the story is try to arrange these things upfront well, and don't try to bend or represent the facts too much to get to the solution that you wish for. Because in this case, Actually, in the end, the conclusion was that there was a permanent establishment. And at the second bullet, you will see that actually the cost of litigation, so of the whole discussion with the tax authorities, was in the end more expensive than the corporate income tax that had to be paid and the fines and interest that were imposed. So similar case, same moral of the story, and please consider that these rules apply, one, if you are hiring regular staff, and that there are special rules when you hire sales staff.
All right. We are proceeding to case study number 3. It will be a little bit bigger case study, because now we go not from the warning side, which we want to give you in the beginning, but to a setting up of a warehouse in the Netherlands. So this is a real case that we were, well, asked to support from the beginning.
Mm-hmm.
So let's proceed on that one.
Given time, shall we just do this case 3, and leave out case 4?
Yeah, we can see where we end. We can see where we end.
Okay.
Yeah.
So to give you a general idea of the setup, the picture that you're seeing now is the setup of how it was at the beginning. So we have a US-based seller of consumer electronics. We've put a UK flag next to the US flag because from a regulatory point of view, the case for UK clients engaging in these activities is now more or less the same as for US clients. So what happened is that we have a US client buying consumer electronics in the US, storing it in the US warehouse, then shipping part of those electronics to Europe, to warehouses of Amazon in Germany, Italy, France, Spain. So the green arrows that you see here on the chart represent the actual flow of the goods. And from the Amazon warehouses, these goods are sold to the consumers. And the blue arrows that go back, that are actually the payment by end consumers. So the goods flow from the US warehouse to the Amazon warehouse to the consumers. Main points of attention, the client was not happy at some point with the setup because of the operational side of things. Actually, when clients wanted to return electronics for repair, which is the service that they offered, they had to be shipped back to the US. Also, when they had to resupply, put part of the supply to Amazon, it took quite a while to ship the goods from the US to Amazon. And basically what they were thinking is, okay, if there are returns, if we have to send extra goods, then we want the goods to be closer to the Netherlands. So we are going to establish a warehouse in the Netherlands, which is the next sheet. So what happened is that they incorporate a Dutch sales BV. The sales BV, they rent a warehouse in the Netherlands, and the goods are now first sent from the US warehouse to the Dutch warehouse, and from the Dutch warehouse to the warehouses of Amazon. Also, what they did at the beginning is that they sent a US operational manager to the Netherlands to set up the operations. And here you will see sort of hybrid between a timeline and a checklist of the things that we needed to do to get this operation going. So at the beginning of the process, what you do, the client hires a business space, which is a warehouse in this case. The BV is incorporated, the BV is registered at the Chamber of Commerce. Then the BV needs to acquire a bank account and tax registrations. One point of attention these days is that when it comes to tax registrations, that the tax authorities are really can ask quite a lot of questions when you want to acquire a VAT registration number. So then they will ask, okay, what are you going to do here? What are the activities that are going to take place?
Maybe it's good to tell that we normally, if companies come into the Netherlands, we use this kind of agenda to cover our support. We'll get to that in this case. Like now we have spoken about the general things we have to look at, but we will cover the employee side, the delivery of goods and services side, and the financial reporting side.
Yeah.
So that's what this sheet is. It will come back a few times, but at least, well, we used to work with this.
Yeah, it's just to give you an indication of the things that will need to happen, and also an indication of the order in which things happen. So in this case, for instance, you have incorporated BV, but now you want to start operations. So the operational manager will start working in the Netherlands. It's the employee side. And well, this chart is just meant to give you an indication of how difficult it is to get someone working and living in the Netherlands, depending on their starting point. So, for instance, the right bottom side means that we have a non-EU national living outside of the EU who will need to come to the Netherlands and will need a residence permit here, a work permit, and social security coverage and a tax package. And you can see, for instance, at the top left, that it's usually easier to start with a Dutch employee because he will already, by definition, have a residence permit, will have a work permit, will have social security coverage, and tax regularly. But we assist clients in this respect, so the setup can be very straightforward. Just make a payroll. But if you need your own staff to come and live and work here, we can also support with the residence and work permits and migration issues. And below the table, you will see some other employee-related topics that we can also cover for you. So that's, for instance, to give a clear advice upfront how the benefits package that you give to your employees translates to Dutch taxation. So how much do you pay and how much does the employee get and how much goes to the tax authorities, and issues such as employment contracts. So after step 1, general setup, and step 2, employee setup, we get to step 3. So we start the actual business transactions. We start delivering goods and services. And in this respect, we would like to mention 2 specific regulations. One is what we call the Article 23 permit. So going back to the case, the client was already looking to set up a Dutch warehouse based on operational
reasons, yeah.
For operational reasons. But that meant also gave us the opportunity to apply for special regulation that we have in the Netherlands. At the top, you will see the old setup. The goods are bought in the US, stored in the warehouse, then transferred to the warehouse in Germany.
In this case was Germany because the Netherlands, there was no Amazon warehouse in the Netherlands.
Yes, indeed. So what then happens is that as soon as the goods enter the EU, that you as taxpayer have to pay the VAT upfront. So you have a cash out immediately, which you will only recover after you have sold the good. So then you will see the first T1 import. It says VAT out 21. The setup after the incorporation of the BV allowed us to apply for Article 23 permit. What does it mean? The Dutch sales BV asked as a tax or fiscal representative of Sales Inc. in the Netherlands. And this allows Sales Inc. To apply for Article 23 permit. Now, what does the Article 3 permit do for the taxpayer? It allows them to import the goods into the Netherlands free of VAT and then sell the goods. And as soon as they have to file the VAT return, they will declare both the sale and the import VAT, which means that in the end the VAT out will only be at the moment that the VAT return is filed. Please note that you can also apply for this regulation if you do not have your own fiscal representative in the Netherlands. But if you have a specialized service provider, I mean, Joanknecht, FedRep, we also can provide that service to you.
Yes, we can. And the main benefit of this one is that you first get your money from your consumers, from your customers. and then you only have to give it back to the tax authorities, instead of the case that it was before, that you have to pay up front when the goods come into Europe.
So that's one regulation for VAT purposes, specialized or applicable in the Dutch situation. Second thing we would like to mention is that as of 1 July 2021, there is a new VAT regulation called the OneStop Shop. In this graph, it shows on the left side that previously goods sold through the Amazon warehouse in Germany, but delivered to consumers in, for instance, Poland, Czech Republic, and Slovakia, led to the client having to file VAT returns in those three countries. In the rules, after 1 July 2021, actually you are allowed to include those sales in your Dutch VAT return, file the Dutch VAT return with the Dutch tax authorities, pay the Dutch tax authorities, and they will then transfer the payment to the other countries, so to Poland, Czech Republic, and Slovakia, which means that you have to fulfill less compliance requirements. And for this client, we actually did this setup because we already did have the warehouse, we did already have the sales BV, so the setup was already in place to be able to do this.
Yeah, it's a big advantage, I think, in comparison with, for instance, Germany, especially the Article 23 permit that you can provide or can have out from the Netherlands. That means that, well, cash-wise, I think this regulation is not applicable in Germany. I think the one country in Europe is Belgium that has some similar regulation. And for the rest, it's, I think, only the Netherlands that has this possibility within Europe.
Well, the next point, well, after we have had general setup, employee setup, VAT setup, then obviously come other things which we will not go into detail right now, such as business administration, annual accounts, transfer pricing policy, corporate income tax return. I think it's too far to go into detail about those right now.
I think so too. Let's use. Well, I'm looking at my watch. Let's use time to get shortly to the fourth case study.
Okay.
Then we have left like 10 minutes or something for maybe questions, or 15 minutes for questions. This is our last case study we prepared. It was a, well, the supporting facts of this case were that the supermarket, we were asked to help in a case where a supermarket has so-called dark stores. What happened is these dark stores are not to be visited, but they are like a warehouse kind of function, and they have also all kinds of cycling couriers who bring and deliver your groceries and the things you need at home, and they do that, they promise it within 15 minutes. So you have an app on your telephone, you need some beer because friends are coming over, and well, it's not in the fridge, so you get your telephone and well, order some beer, and within 15 minutes, doorbell rings and there is a guy on a bike delivering your beer. It's all now in the Netherlands and some other countries in Europe, and what the question was here, this company asked us, could you scale up with us in a very fast way? We need, like, within a year from now, and that is June 2021 up until June 2022, we need support on, well, for instance, 5,000 salary slips that we have to make, because we think we hire from now to within a year 5,000 staff, and that is what we supported them with, and we are doing that at the moment. So scaling up very fast with our clients coming into the Netherlands and setting up new businesses. So we implemented the BV, we did all the things that you just saw on the checklist, and we are now in the phase of scaling up with the salary slips. What I wanted to stress in this on this one is to make a little comparison with the personal income tax rates for employees. If we have a comparison, the income tax rates in the Netherlands start off with 37%. And you pay this percentage up until 70,000 euros of income. So that is, if I'm correctly, slightly less than 60,000 pounds. And above that amount, you will pay 49.5% of personal income tax. If we set these percentages off to a German comparison, in Germany we have the Einkommenssteuer, also personal income tax, but then of Dutch, it's 42%. So that means it's quite in the middle of the 2 percentages we have in the Netherlands. And we have a break-even level of 150,000 euros of income. That's approximately small 100,000 pounds. That it seems to be more profitable for your staff to be in Germany than in the Netherlands. But of course, we thought of something we can use to stay in front of the Germans. And that is that we have what we call a 30% ruling for staff coming in from abroad. It's a tax exemption rule for employees who are hired from abroad. We just saw if you bring people in from the UK and they have special qualifications, there are some regulations on that, they can apply for the 30% ruling. And that means that 30% you get for 30% of your income, you get a tax exemption. What is nice to tell about this? Let me check. Oh yeah, the one thing I wanted to mention is the employee coming into the Netherlands must not have resided within 150 kilometers from the Dutch border. So I looked it up, and everybody coming from London is safe. And that means 18 or 20 months before coming to the Netherlands, you must have not been in that region, working in that region. So that's a small thing. The other thing is, but it's less important for companies doing business in the Netherlands, is that the VAT percentage rate is 21% in the Netherlands, mostly. There are some lower rates also, and compared to Germany, where they have the Mehrwertsteuer, that is 19%. But it doesn't hurt companies doing business in the Netherlands very much. Let me check what I wanted to mention on that behalf before we finish up. Of course, we can with our payroll services, employees coming in from the UK or other countries, we can help them claiming the 30% rule and also implementing it in the salary systems that we support clients with. So for this, I think we can go forward to the questions. Has been quite a long talk from out of Eindhoven now. We implemented in the sheets our contact details, so if anybody of you have specific questions that are specific for your firm, you can contact Peter or myself. And maybe I can ask Tony to jump in and see if there are any questions left that we can answer right now in the lead.
Yeah, thank you guys. That was great. Very good use of graphics and lots of patriotic flag waving going on there. The questions have been coming in at a decent pace actually, and obviously there were a few that were submitted in advance. So I've tried to sort of rearrange them and put them into sort of some sort of order. And I'll start off with what I think are probably the easier and more practical questions. David asked, do you have to have a physical office in the Netherlands, or can you have a virtual office when setting up a company?
Depends on what you need it for. If you're talking about having actual tax residency here and having sufficient connection with the Netherlands to qualify as a VAT taxpayer here, a virtual office is not sufficient. But what does happen, I mean, we show it to the case of the warehouse. Every new setup is in the beginning low substance by definition. So as long as you can show a reasonable case to the tax authorities on what you're planning to do, that will not raise any difficulties for you. But if you're looking basically to just only hold this postal box company and still, for instance, claim an Article 23 permit or use the Dutch BV to route payments to them from other countries to the UK to make use of the tax-free network, that's basically old school, to be honest. There is so much regulation that prohibits this that we do not recommend it to our clients.
Okay, and picking up on one of the points you mentioned, you talked about how bank accounts take maybe 2, 3 or 4 months to open. Do you need, one of the questions is, do you need to have a director based in the Netherlands to be able to open a bank account?
Formally, no. Some banks attach more value to that than others do. But the cases that our clients, I think I can by heart already name 3 companies that we have, which have significant operations here, but they still prefer the director to be, in this case, Australia, UK, and US, because they do not want their local staff to have full authority to execute payments or engage in contracts for the Dutch BV. And banks are able to work with that setup.
Okay. I've got a question here that's coming in from Tim. He says, I have a, forgive my pronunciation, I have a stamrecht BV. Is there a process for converting it into a BV that I can use as a trading company?
Oh, okay. It's called Stamrecht BV.
Sorry.
It doesn't. It's good, Tony, because well, my English is just as rusty as your Dutch, I suppose. So
I don't think so.
No, Stamrecht BV. It's also a BV. It has the purpose of doing your pension fund for you. So we do not recommend to get activities in that one because, well, your pension scheme is in there, and you don't want normally you don't want extra risks in this same BV. So we would recommend to have another BV in place, maybe underneath this Stamrecht BV, and use that one to do business with. Incorporation of a BV is just a matter of 2 weeks. You need €1 to incorporate the BV. So it's really not much of a hassle, and the risks can be limited to the pension fund. So we would not advise to put it all in one BV.
No.
Okay. Okay. I got another question here. I assume the question says, I assume there are no withholding taxes between the UK and the Netherlands.
There are. We have, like in the presentation, we do have interest and royalty withholding tax. Again, it only applies if the interest and royalty payments are in the end routed through a low tax jurisdiction. So, for instance, we see these structures quite a lot actually, is that you have a US investor who is US based, then has an intermediate holding somewhere in the Caribbean, and either directly going to the Netherlands or to Luxembourg or to the UK. When the royalty of interest payment is routed through the structure to the Caribbean, in short, it can be that you do have a source withholding tax, but right now it's very limited because each year we publish a list in advance for what will be considered low tax jurisdictions for the next year. Dividend withholding tax, we already have that for quite a while. Doesn't normally apply if we have a subsidiary relation. It does apply if you have a individual in the UK holding shares in a Dutch BV directly, so from the private level. One point of attention that came up in the last years that even if you do have a Dutch subsidiary and a holding in the UK, if the UK holding is really low substance, so it's only holding the shares in Dutch BV, you might run the risk that the tax authorities try to neglect that UK holding and say we have to think like the holding isn't there and actually withhold dividend withholding tax. Do we see that happen a lot? No, to be honest, but it is a change when compared to the years before.
yeah, there's more compliance on that, and I think in a normal situation where you have substance between the Netherlands and the UK, there will be not much of a hassle of withholding taxes. We have the regulations in place that there is no limitation in moving the money from the Netherlands to the UK, I suppose, in a normal situation.
Yeah.
Okay, I've got another one coming. In the sales staff scenario that I think you presented, is that only for people who are properly employed as staff, or also for freelancers?
Yeah, well, that's not so easy to answer because well, we have some specific developments on freelancers with respect to the people being employed. But last few years, Dutch government had attention to other parts of our tax system instead of this one. So they are at the moment, and I must be careful what I say, they don't have too much attention on this situation. So if you hire somebody with a freelancer doing work for you, that might, in most cases, in practical situations, go okay. But normally they see it as, well, for instance, if you do nothing else for 2 years as a freelancer, then they will transfer that to the idea that you have been on the payroll.
Yeah, maybe it's nice to add that I think what we're basically talking about here is quasi contractor, independent contractor relations, which I think is an issue also in the UK. Our government has been struggling with it, and the legislator has been looking for a complete overhaul of both the labor law itself and attached to that wage tax and social security benefits. So trying basically to align those regulations to get one clearer concept of what is actually an employee and how do we tax them. But it has been a struggle for a couple of years. So basically, they're still trying to figure out what they're going to do with that. And in the meantime, indeed, there has been a semi-moratorium on going after taxpayers, and I think only in very clear abuse situations they go after it.
Yeah, and then the second thing to mention is we have no government for over a year now, so well, we don't suppose, and things are going quite well in the Netherlands without the government. So I suppose we can manage to get this a year further from now. We'll see what happens, but not first priority at the moment.
You mentioned politics there. Actually, I've got another question here. Someone said that they're at the point of considering opening a subsidiary in Holland that will require quite a substantial capital outlay. What they don't want to do is make the investment, then for the Dutch to, as a country, decide that they want to leave the EU, just as we did, because that would remove some of the reasons that they wanted to go there in the first place. So what's the current political situation? I think you've kind of said you're in a bit of a strange position. And the views of the Dutch people on its current membership of the EU.
Yeah, I think if I have to look into that, we were, of course, one of the first countries to implement the Benelux and then afterwards the EU. And the political atmosphere at this moment is that we are not going to leave the EU. We are not able to, I suppose. We are just a small country, and we will be. We suggest we will be harmed very hard if we leave and get to ourselves. Of course, there are some political callers within the Netherlands who are shouting that we have to get out, like the brave British did. But we also seeing some.
Is that really what they're calling us?
Well, they call you a lot more, but I don't want to mention that in this presentation. At least the word brave is one of them. So I don't suppose we are getting out. I'm quite sure we're not getting out. We will be maybe one of the last going out, and it's quite a stable situation on that, I suppose.
Only if Germany leaves, right?
If Germany leaves, yeah.
Only if Germany leaves.
No, then we'll stay in. If Germany leaves, we'll stay in.
Okay, I think I've got one last question, and we've got a few larger companies on the call, and they've a couple of them have said that transfer pricing is a requirement in the UK once you reach a certain size, or the group reaches a certain size. Do you have a similar requirement in the Netherlands? And if you do, is the documentation required similar to that of the UK, or can you actually use a UK specific report that covers the group? Will that suffice for the Dutch tax authorities?
Yeah, okay.
Yeah, basically you can have three categories. Plus 750 million group turnover requires country by country reporting, and I'm assuming we're not talking about that. I think you're mainly referring to what we call the master file, local file. If we have a group working cross-border that has a group turnover of over 50 million euros, you are required in the Netherlands to have a master file, local file. I would expect your UK companies to have a master file, so basically laying out the transfer pricing policy for the group as a whole. Local file is mainly, you can do a country file saying, okay, I have, for instance, 3 subsidiaries in the Netherlands and combine them in one file, or make a file per entity. As long as you have a group policy and translate that group policy to the local situation in the Netherlands in your local file, that should be okay, but be aware that the threshold for this master file and local file can differ per country. So for instance, I know that Belgium only requires a master file, local file. I think if the asset side of your balance sheet comes above, on the top of my head, 100 million. But in the Netherlands, we have a limit of 50 million euros group turnover, and that's it.
Right. Okay. Well, I think we've come to an end of the time slot. So a big thank you to Mark and Peter for their time and effort in putting together a hugely informative session. I don't know if either of you have any final words you want to say before I wrap up.
No, Tony, thank you very much for introducing us to your clients. Well, anyhow, the sheets, I suppose, will be
yeah, we'll circulate this. We'll circulate the slides.
Thank you very much, and thank you for your hospitality today.
That's
hope to see you soon, but then not by screen, but live again.
Okay. Well, we'll if you've got any questions, do contact Mark and Peter directly if they've not been answered. I'd like to take this opportunity very briefly to signpost the next Doing Business webinar in the series, which will be on a date to be confirmed, probably early to mid-February. Only this time we'll be going to Dubai and the Middle East, so look out for that one. Then we'll move on to, I think, maybe the US or South America. That's still to be determined. But again, thank you, Mark and Peter, and to everyone that's been watching. Have a very good evening and a very good day. Thank you very much.
Thank you very much.